Aotearoa, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We're now in week 5 of a completely preventable global crisis. But first we should note that we're now touching the end of the month and the end of the first quarter. This is when fund managers and other large investors lock in their results for the upcoming reporting. So there is a lot of position squaring activity at present, and that tends to skew financial market activity. But the fundamental drivers, economic activity, inflation, geopolitical events, are not stopping, so there's still substantial market reactions to those. That is driving serious risk aversion, and markets watch key policymakers too. Fed boss Powell was out speaking today to an economics class at Harvard. In answer to questions, he said distress in the private credit markets looks more like a correction and not like a broader systemic event to them. He also said they would regard the inflation threats from the war in Iran as transitory and that their patience was limited, given the fact that US inflation has been above 2% for 5 years now. And the New York Fed boss Williams was also talking, and he seemed to be more concerned with the jobs market, saying a rate cut is a real possibility if it weakens further. Meanwhile, the Dallas Fed's factory survey was a touch weaker in March than February on slowing new order growth, but their company outlook index dropped into negative territory, and their outlook uncertainty index leapt. In China, they reported an enormous current account surplus of almost $250 billion in the fourth quarter of 2025, almost $750 billion US for the year, one that is globally destabilizing. Also, we should note that countries that signed up to the Chinese Belt and Road system are finding that they're on the short end of that deal. The two items are likely related. India's factory production was up 6% in February from a year ago, better than expected. And in Europe, the Eurozone Economic Sentiment Indicator dropped in March on rising inflation expectations tied to the Middle East conflict. So it'll be no surprise to learn that German inflation jumped in March, driven by fast rising fuel costs to its highest in over 2 years at 2.7%. We should note that the aluminium price is on a sharp move higher again, approaching its mid-March post-pandemic record high. With Middle East production damaged or out of service because they can't ship, China's dominance of the aluminium market seems likely now. And air cargo demand surged in February, not only in response to Chinese New Year demand, but businesses seemed to rush the sector to get goods shifted fearing the Middle East situation. Sharply rising fuel costs, fuel scarcity in parts of the world, and severe disruption to key cargo hubs in the Gulf are major shifts. February air cargo activity was up 11% from a year earlier, with the Asia-Pacific region up 13.6%. But how this played out in March and how it will play out in subsequent months are likely to be a highly volatile mix of urgency restrained by sharply rising costs. And it's worth noting too that concerns are rising that the oil and supply chain problems are almost certainly going to provoke a global food crisis at some stage, not only due to sharply higher costs, but sharply lower production at the same time. But that is still yet to hit us all. The US Treasury 10-year yield is now just on 4.34%, down 10 basis points from yesterday. And the price of gold will start today up $54 from yesterday at $4,547 an ounce. Silver's up $1 to $70.50 an ounce. And American oil prices are up another $3 at just over $102.50 a barrel, while the international Brent price is 50 cents lower at $112 a barrel. Ship transit traffic in the Straits of Hormuz seems to be slowly returning, but on Iran's terms. And the Kiwi dollar is 30 basis points lower against the US dollar from yesterday, now at 57.1 US cents. Against the Aussie, we're down 20 basis points at 83.4 Australian cents. We're down 90 basis points against the yen. Against the euro, we're unchanged at just on 49.9 euro cents. That all means our trade-weighted index starts today down 25 basis points at just on 61.1. And the Bitcoin price starts today at $67,359 and up 1.4% from this time yesterday. Volatility of the past 24 hours has been moderate at just under plus or minus 2.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.